Oregon Cash Flow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Hey, good evening everybody. Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. We're here every Wednesday at 6 o'clock Pacific time, or whatever time it is where you're at. So, hey, Top Gun, how you doing? Jones, hello. All right, good. We can start off with a question. That works out good, but let me get you guys caught up to speed for a second. We'll give people a chance to roll in here, get into this live stream, and make sure that my mic is working. You guys can hear me okay. Let me know if for some reason you can't. Last week, you saw stuff behind me. Didn't have my green screen available because we were not at my house. We had to evacuate due to the fires here in Oregon. We had to evacuate. I think the fires got to, about 10 miles away. Probably around 10 miles away. We ended up in a level 3 evacuation. Mike's good. All right, good. Level 3 evacuation. So we headed into Springfield, stayed with the in-laws for about a week. So thank you to them. If any of you are watching, thank you for letting us stay over there. Saved most of our groceries. Our power was out for that whole time. And we just got downgraded to level 2, which happened on Monday. And our power came back on later that night, and then we still didn't have any internet, so we still couldn't come stay here because everything I do requires internet. So so we stayed there one more night, and then our internet came back on. We've been moving stuff back, and now we're back into the house. Fire threat has mostly subsided. It's still really smoky outside, so you can't really go outside without a mask on. We keep all the doors closed. So that's where we're at. Smoky in downtown Portland. Yeah, it is. Pretty much everywhere in the state is hazardous outside. The air quality is just hazardous. So not doing good, but we're thankful. The house is okay. We didn't have any issues. No issues with the house. Didn't have any issues as far as the fires getting close. So we got lucky. A lot of the people we know, a lot of people nearby, a lot of the my kids' friends who live up near Blue River, they don't have houses anymore. There's a few hundred houses that got burned down in that fire, and a bunch of other fires across the state where a lot of houses are down. So we definitely consider ourselves lucky. So yeah, now you guys are caught up. Carlos, hey, how's it going? Definitely consider ourselves lucky, and we're glad to be home, and I'm ready to provide you with some value. So, because of all that hecticness, actually, I don't think we got any voicemail questions today. Didn't get any live voicemail questions. So, there's a couple of things that we can do. We can go without any voicemail questions, or I do have a new private Discord channel that we set up, which we're going to use for doing live questions. So if anybody's interested in joining the Discord channel, there's one way that you can do that, and that is to go to the Patreon link in the description. Go to the Patreon link, join my Patreon, become a patron. You can join for as little as $1, and that will put you right into, they'll send you a link, they'll add you right to the Discord channel, and yeah, Discord, Top Gun. So it'll add you to the Discord channel, and in the Discord, we have voice channels and we have text channels. And you're able to participate in both of them. And if there's anybody that's in this chat and you join and you're in the live, if you can get on the voice channel and you want to ask me a question live, we'll make it happen. So I'll figure out how to make it work. I haven't had a chance to figure that out yet. But F it, we'll do it live. We'll do it live. Don't know if any of you will get that reference. Little Bill O'Reilly Little Bill O'Reilly reference there. All right, but Jones has a question in the chat, which is awesome, so thank you. Make sure you guys, if you have any questions, put them in the chat here. I am able and willing to try and answer whatever you throw at me. So here we go. Jones says, in reply to a previous question from me, you stated dynamic banking could be used for paying off student loans. In such cases, students probably don't have a HELOC. What else could they use? Good question. Elemensor, aloha, aloha. Raphael, good evening. Okay, so the question is dynamic banking and student loans, and if they don't have a HELOC, what else could they use? There's a couple of ways to approach this. Just to catch other people up to speed, we have a whole lot of new subscribers. A lot of people came in and subscribing because I'm doing a lot of live streaming of the stock market throughout the day as we're watching Tesla and all of the excitement around Tesla and the Tesla stock. And so, quick refresher on dynamic banking. Dynamic banking is how we move money. It is offsetting interest, maximizing the use of the cash flow that we have, any money that comes into our hands. And we love to use lines of credit, home equity lines of credit especially, because the rates are really good and you can usually get a very large amount in order to work with. So it creates a level of flexibility that allows us to really move money all over the place in an optimal fashion. So that's dynamic banking in a very, very small nutshell. Check out my videos if you want to find out more about that. Excuse me. I think it's the smoke is kind of getting to my throat. It couldn't be the hours and hours of live streaming that I've been doing every day. So, what are the other options if you don't have a home equity line of credit? That is a great question, and we have a few different options, okay? You can get a regular line of credit, okay? You don't have to have a home. A regular line of credit, you can just go to a credit union, somebody who you have a banking relationship with. Hopefully, even though if you're a student, you've already started creating that banking relationship by getting a checking account, a savings account, and maybe a couple of credit cards. Started building your credit up. If you're young and you have not made it through those steps, you're going to have to check out my earlier videos. Let's see, what was the name of that one called? I have one specifically for teens on how to get your credit up to speed quickly and make sure that you've got good credit. I went into a whole bunch more than that. It's kind of a long video, but a lot of good content in there. If you need help finding that, let me know. We'll figure it out. So, a regular line of credit. You basically need a 680 credit score. Maybe 660. You might be able to find somebody to do one at 660. But a regular line of credit works just like a home equity line of credit, and you can use that effectively to do dynamic banking. In fact, it's probably the second choice that I would like to use for dynamic banking. Home equity line of credit, number one. Regular line of credit, number two. A regular line of credit is typically unsecured. The rate ends up being higher. So that's why it's number two, is because the rate's higher. We're always trying to we always want to borrow money for as little as possible. Option number three, and this is not necessarily in the order. This is not necessarily in the order that we'll do it, that I would recommend doing it in. Although, it's probably pretty close. So we'll say option number three is start an infinite banking policy, or an IUL. Some type of permanent life insurance policy. Those work just like lines of credit. So if you don't have the credit, you don't have the credit established, you don't have the credit score in order to be able to qualify for a line of credit through a bank, you can create your own line of credit effectively by beginning one of those policies. And you want to make sure that it's specially designed for high cash value. That way you're minimizing your insurance costs. You're minimizing the amount of commission that you're paying an agent, and you're maximizing that cash value from year one. That is a good way to establish your own line of credit. And we call that infinite banking because you're taking over the role that traditionally bankers do. And it is something everybody should look into. But why is that the number three option in my list of three? It's mostly because of how long it takes to access the funds. A home equity line of credit and a line of credit if you have a checking account associated with that same bank or credit union that you're getting that from, you can transfer the money instantly. So you have access to it, and your ability to offset interest anytime money comes into your hands is much faster. You can do it every single day you have extra cash. You can immediately start offsetting interest. With a life insurance policy, it's going to take you 2 or 3 days to get the money in, 2 to 3 days to get the money out. And that's probably best case scenario. So if you get money that comes into your hands and you want to offset some interest, you can't do it if you need to use that money for a bill within the next 4 or 5 days, because you've got to make sure that it's available. And in order for it to be available, you can't have it in transit between you and the insurance company. So that's why that's the number 3 option. Okay. Number 4, if none of those are an option yet, you want to try and do something right away, you can get a credit card, try and get a rewards credit card, something that has a 0% interest. We want to see a 0% interest for 12 to 18 months or longer if it's available. If you can get a 0% interest credit card, you can kind of do some dynamic banking using that. You can use a company called Plastic, Plastiq. Look them up online. You can pay bills with that wouldn't normally accept a credit card. So it means that allows us to use the balance in that credit card for more than just what we might typically charge a credit card for. So that's one way of doing it. The other way is, without using Plastic, you might be able to just write a check from that, do a cash advance. Okay? Cash advances on those cards are not usually at 0% interest. So that's why I say look at Plastic first. Usually a cash advance will come with 5% charge or something like that. And then you might have to pay an interest. They may not give it to you at that rate of 0%. So these are things that you're going to have to analyze yourself or talk to me about it. You can always set up a meeting and talk to me about it if you're struggling on which way to move. But 0% credit card would be the next ideal choice. I wouldn't do it with a card that has a very large interest rate. Okay? You might be able to do it effectively that way, but you're very limited on how much of your income you can put into a credit card and have it offset. So when it comes to doing a credit card, if you don't have that 0% interest, you're going to want to have that card paid off each month in order to avoid those interest charges. So it gets a little bit complicated, but I'd put that as my number 4, and that would be the 4 different ways that I would approach doing that. Now you could always do it. Let's say you had another asset that you could get a loan against at a good rate, like you have a car that's paid off. If you have a car that's paid off, you got student loans that aren't, and car loans are a better rate than your student loans. You could kind of arbitrage there. You could get a car loan, have a low interest rate from that. And the money you get when you get that loan, because you already own the car, you can then put that money towards the student loan. Probably not a situation that really you're going to find yourself able to do for very much. So that's why I barely throw that in as option number 5. But other than that, I would go with the first 4 options. And if for some reason that doesn't work, talk to me. We'll figure out how to make something work for you. So how's that, Jones? Did that answer your question well? All right, Jones said the mic was all good. That's a good thing, because if we missed all that, I just went on a 15-minute rant. That would have stunk if for some reason my mic wasn't working. All right, Carlos. Carlos has a question. He says he has 2 kids, 19 and 16, need to have insurance for them. Okay. If there is a policy that you can have 60 to 70% cash available, or is there a policy? For example, $10,000 in the first year and available 6 to 7K. If so, which one is it? Yes, there absolutely is policies that you can have 60 to 70% cash available. In fact, depending on what type of insurance you go with, you could have 90% cash available. You can get 92 or 93% cash available in the first year, within the first month. So there's a number of different policies out there. Now, when you're talking about kids, I would probably direct you to an IUL first. And there's a good reason for that. One, when we're talking, you can get the cash value available even in the first year in an IUL. It's not going to be 90%. It'll probably be closer to the 60 or 70% because of the surrender charges. But the growth potential that policy has over the next 40 to 50 years is much higher than what you'll see in a whole life product. You can always try that policy out, see if we can get that growth that we're trying to. And if for some reason that doesn't work out while their cost of insurance is low, the cost of insurance doesn't start to really go up very much until 20 or 30 years down the road. And then even still, it's only still very small portions. It doesn't really get expensive in those policies until they get like 70 years old, 75 years old. So when we're talking about kids, you've got 50 years of ramp up where they don't cost hardly anything for the cost of insurance, and everything you put in above that has the opportunity to grow along with an index. So I'm glad you brought that question up because I happen to have something set up that I can show you guys, and it's a policy that I just set up on my kids. Now, this one is for a 13-year-old, but you're going to be able to see the growth potential that this particular product, in this case it's Allianz, you'll be able to see the growth potential over the next 50 years. And I got to tell you, it's kind of silly. But I'll quickly go through why that is. I noticed Demi has a comment here. Says, can you touch on maximum funded IUL? What I'm about to show you is a maximum funded IUL for my kids. And I'll go through that and show you guys a little bit of what, I'll show you why I did it and some of the benefits to that. And so if you have questions about it, put them in the chat as we go through it. Let me switch over to that screen. Give me just a second. Okay, so this is Allianz Pro Plus Advantage. Now this is the actual illustration of the policy that I just got for my daughter. She's 13. And let me get over to that so I can scroll down and talk to you guys about it as I'm looking. Okay, so you can see we have an initial death benefit, $300,000. We've got this set up at age 12. I was able to get that in right before her last birthday. She just had a birthday. And we can see right here, we have this illustration makes a couple of assumptions. Okay, it has 3 different amounts that it kind of displays to you some possibilities of potential growth, depending on what the interest rate ends up averaging. Now these are all working with averages, okay? If it gets an average of 6.73%, then we're looking at the results in the blue column. If it gets an average of 6%, we get the results in the silver column, and if it averages 4%, we get the results in the greenish column, okay? So it's a $300,000 death benefit. At age 66, if we get a 6.73% interest rate, the death benefit in the policy is going to be close to $3 million. So it went up from $300,000 all the way up to $3 million. The planned premium, what I'm going to put into this policy, is $3,000 a year, just under $3,000 a year. This is maximum funded, okay? This is the most that they'll allow me to put into it. And so when I signed up for this policy, I designed it to where the base premium, the cost of the insurance, is very, very small. The minimum amount I could put into this policy if I needed to is probably a couple $100 a year. Okay, it's really not very much. Maybe $300 or $400 a year, if for some reason I needed to minimum fund it. But I'm planning on maximum funding it at close to $3,000 a year. Total planned premium paid over years 1 through 54. So I have this set up so that she's going to pay it all the way until a typical retirement age. That total is going to be almost $160,000. Okay? $3,000 a year, 54 years, $160,000. Now, tax-free access to cash value through policy loans. When she becomes retirement age, this, and you'll see the illustration when I scroll down, the potential for her to have this as a pension in retirement is $242,000 a year if we can get a 6.73% average, according to the indexes that we're tied to. That's a lot of money. I think she's going to be pretty happy if we get that kind of growth. Okay? The amount of money that she's going to be able to pull out of the policy if she lives to 120, which is when these policies mature, would be $13 million. So she would put in $159,000 in premiums, and over the course of retirement, which is like 50, 60 years, she'll be able to pull out $13 million. Now, if it's less, if for some reason it's 6%, now it drops down to $153,000 a year. That's still good. I'm not looking at that kind of pension in my retirement. So we're definitely going to be, she's going to be a happy camper if she even gets 6% average. And she'll be able to pull out $8 million over the course of her retirement years if she lives really, really, really long. Now, whatever she doesn't use ends up going to the beneficiaries. So her beneficiaries will still get a substantial death benefit. Now let me go down and show you how this works. In this case, we have specific index options, and this is why I really like Allianz for a growth product like this. They have some really good index options, and in this case, these are the two that I chose, the Bloomberg and the PIMCO. These are volatility indexes. There is no cap, which means if we get a really high interest return on any given year, the cap is not in effect. And not only that, but I get a 150% participation rate. So if we get a 10% return on the year, I get credited 15%, so 150% participation rate. I'll get credited 15%. And then on top of that, with these options, I get a 40% bonus on top of that. So from 15%, multiply that times 40%, that's another 6. Is that another 6%? Yeah, probably another 6%, right around there. So 21%. I would get 21% interest credit that year using these options. Okay. The potential is very, very high. The growth potential is very, very high depending on how the returns are. Now there's other index options, but I'm just going to go over these two because these are the ones that I chose. And the reason I chose them is the no cap, 150% participation rate. These are volatility indexes, which means they're actively managed to avoid the high highs of the stock market and the low lows. But over the last 10 years, this one has averaged almost 10%, 9.99% return. Over the last 15 years, it's averaged over 8%. That's before the 40% bonus. So pretty incredible. And if we can get that type of return moving forward, obviously there's no guarantees when it comes to the index options. There's no guarantees what the stock market's going to do in the future. But if we can get close to that, we're going to surpass that 6.73% average that this illustration is based on. And that means those numbers, the potential retirement numbers that she could get, are just, they're so silly. I don't even know what they would be. It would be really, really high. Okay. It would be really, really high. And there's one other aspect to these indexes that I like. You have the ability to lock the growth into it at any point throughout the year that the New York Stock Exchange is open. So, when might you do that? You might do that if, say, your policy anniversary is in April. Let's say your policy anniversary is in April. And March of this year rolls around and your index is up 8%. And suddenly you hear about this Coronavirus. What's this coronavirus? What's that going to do to the stock market? Oh, it might not be very good. You know what? I better lock in this interest rate. You lock in the interest rate, you get the 8%. April rolls around, the stock market has tanked, you still get that 8% growth. And then when your policy renews right there, when your index option renews for the year, it doesn't renew at the locked rate. It renews at whatever the rate the market is. So it would start off right there at the bottom. So you just saved yourself from a 0% year. You got an 8% year because you had that ability to lock it. So I'm willing to spend a little bit of time managing this policy throughout the year. And by managing it, it just means I'm going to pay attention to what that index is doing. And I'm going to kind of pay attention to what the overall market is doing, because if for some reason I want to lock it, I have that ability. So I love those index options. I'm going to double check the chat here real quick, see if you guys have any questions in the meantime. Otherwise, I'm going to keep moving forward and going through this illustration for you. Let's see. Zing, you worked in finance, never heard of these terms before. Dynamic banking, what is it? You got a notification that you stream and you're not looking at Tesla. I know, most of my streams these days have to do with Tesla because I'm pretty excited about what we've got going on there, but not all of them can. I got to do a little bit of work here and there, and this is where we make our hay. Talking about finances and helping people get their finances in order. Dynamic banking is a term that I created. So that's probably why you haven't heard of it before. It's similar to velocity banking. In fact, it's so similar, it's exactly the same thing. So why do I call it dynamic banking? I call it dynamic banking because I wanted to do this. I wanted to teach people how it works, and I didn't want anybody to get upset if it was a copyrighted term. So I came up with dynamic banking. It basically means the same thing. Dynamic to me is defined as something that continually moves, and that's what we do with our money. If we keep our money continually moving and optimizing, then it's going to do better for us. So I came up with dynamic banking, and that's what I'm running with. So if you're familiar with velocity banking, it is the same thing, except I don't charge any money for it. All the people out there doing velocity banking, they want to charge you $3,000 or $4,000 for some software or to work with somebody so they can show you how to do it. I don't do any of that. I call it dynamic banking. I offer it for free. I put videos out on how to do it. I kind of explain every step so that someone who's willing to put in the work can see how to do it. Most of the people I think that need to know how money moves optimally and to be able to put this in place in their life, they may not have the means to pay $3,000 or $4,000. And if they're really in debt such that they see dynamic banking or velocity banking as the answer that they're searching for, paying somebody $3,000 or $4,000, it doesn't make a whole lot of sense. I would rather them be able to get out of debt without having to unnecessarily shell out thousands of dollars to somebody else. It's not that difficult. I don't think it's that difficult. And if somebody just spends a little bit of time looking at it, I think they can figure it out. The main thing isn't necessarily that you need to know exactly how to figure out how much your exact savings are doing dynamic banking or velocity banking and target this debt and this debt and this debt. It's the overall concept. And if you start to understand how to move money efficiently, the specifics of those won't matter because you're going to be moving it in an efficient manner, and you're just going to be able to wipe out debt after debt after debt, and then you're going to be able to turn that towards growing your wealth. So my main goal is to get that overall concept hammered home. And if we can get that overall concept hammered home, people are going to be much better off, not just with the particular debts that they're working on, but they'll be able to apply those concepts across all of their financial life. So, Elementor, you like your streams. Oh, I appreciate that. Glad to have you here. Oliver, do you think Tesla access trade-ins? You wasn't sure. Do you think Tesla access trade-ins? I'm not sure what that question. Oh, accepts. Do I think they accept trade-ins? I have no idea. I haven't had a chance to buy one yet. That's a good question. That's a good question. I'm not sure. I guess if anybody knows, help us out in the comments section. I haven't had that opportunity yet to look into it. And the Cybertruck I have on reserve isn't going to be available until probably late next year, possibly 2022. So I'm not even thinking about it until then. Jones, thanks for your detailed answer. You're welcome. You're welcome. Raphael, what are your thoughts on Fed's decision to keep inflation at 2% and lower interest? I don't think they have an option. First of all, their decision to keep inflation at 2%, they don't have a choice as far as that goes. In fact, they're probably going to struggle to keep it at 2%. Even with all the money that they're pumping into the system right now, because so many people are out of work, that money is not going to create inflation. So keeping it at 2% inflation when they've struggled to keep it at 2% inflation over the last decade, I think we've ended up somewhere in the 1% or less range for actual inflation over the last decade. And they've always had that 2% goal. It's kind of hard. It's actually very hard for governments to hit a targeted inflation rate. Typically what happens is they announce their intention, and because that's the intention, everybody thinks that's the goal that we're shooting for. The economy tends to run pretty smoothly no matter how it ends up, how much the inflation ends up. Now, I'm not talking about every economy, of course, because some economies can't support that. We're based on the dollar, and we create our own money. There's huge global demand, and the dollar is the world's reserve currency. So we can just simply create a ton of cash, which you see we've been doing, and it will not lead to runaway inflation like you see in countries like Venezuela or something like that. That just simply can't happen because of everything that the dollar is tied to. Okay? It's really not possible. We can hit some inflation rates. We can't hit runaway inflation rates. Okay? We could push that rate up. We could go above 2% if we put too much money in and it wasn't targeted properly. Now, one could argue that the direction, how the Fed is putting that money in, is not targeted properly. And I would probably make that argument. It's mostly targeted to large corporations, people who already have access to money, people who own everything already. And so the people that actually need the money that would spend it and get the economy going in a proper fashion, the money's not going to them. So I think what the Fed's doing is kind of propping up from the wrong direction, enough so that it's kind of working a little bit, but it will not work in the long run, in my opinion. So for them to keep it at 2%, I don't think they had a choice. I think it's good that they came out and said that, because talking about it makes a big difference. What the Fed says helps. If the Fed came out and said they wanted to shoot for a negative interest rate, negative inflation nobody wants, first of all, but a negative interest rate, if they said they wanted to shoot for a negative interest rate and not just keeping it close to zero, that could change things. I mean, what they say makes a big difference in the overall markets. Negative interest rates are very, very hard to get out of as a government and with an economy. It's very hard to change once you get into negative interest rates, although I understand why some countries try to do that. But it's good that they are avoiding it, and it's good that they're talking about that. Should help the markets overall. We just got to hope that Congress does something as far as stimulus funds. We need to get money into the hands of the people that are struggling and the people that are being evicted, because that's going to lead to a much greater crisis if we don't get that handled. That's my thoughts on that. So hopefully that helped answer your question. Demi, can you touch on maximum funded IUL? I will get back to that in a minute as soon as I catch up on this chat. Raphael, is it worth it to take an IUL for yourself, or is this an example better insuring for young children? I like them on both. It just depends on what your overall situation is and what you have secured in your wealth pyramid. So we have what I like to call a wealth pyramid. We want to have, each of us have a pyramid that our financial base is built on. And we want to make sure that the base of that pyramid is solid. Check out my videos on that, on the wealth pyramid. You want to make sure you cover that financial base. If you cover that financial base, now you've got that base of the pyramid and it can't wobble, right? That's why pyramids are are strong is because they have a very strong base. They can't just tip over. The problem is at the top of this pyramid is risky investments. Investing in investing in basically paper things that are not solid assets. I consider solid assets something like a home or real estate, something that's tangible where it can't just go to zero overnight. Something that would just be paper might be like a penny stock, something that all of your investment in it can completely disappear overnight. And people tend to invert that pyramid. So rather than covering their base and building a nice solid base, they build their wealth this way. Okay, they don't have a pension, they don't account for their Social Security, they don't have proper insurance, and what happens is that's very wobbly. It might start out okay, but it can tip over at any moment, and when it tips over, that's when people get themselves into financial trouble. So you want to make sure that you got that base covered. Now, when it comes to an IUL on yourself or an IUL on your kids, whether it's an IUL or whole life insurance, I like one or the other of that. Make sure you have yourself covered first. It doesn't matter if your kids are going to get better health insurance or life insurance rates and your overall growth might be better, because in all likelihood, you're going to pass away before they are. And the money that you put into life insurance on you can pass on to them tax-free as a death benefit. And if you pass away early, they're going to get that full death benefit. And when you turn that into a percentage of growth, that's going to outperform anything your kid's policy can do, unless your kid's policy is performed, for 30 or 40 years first, and you're still alive. But presumably, you get the policy on yourself, you're still getting good returns. If we can get a good policy designed for you and you qualify for life insurance at a standard rate or better, we can get you good enough returns, and then you'll have the growth in that policy as well as that death benefit backing it up when you pass away. So I would definitely say cover yourself first, make sure you're covered, and then we can look at getting your kids covered. It also helps to understand that when it comes to insuring your kids, you're usually limited to half of whatever you're insured for. So insurance companies like to see parents covered, and when they come up with how much kids can get covered for, they will give a death benefit of half of what the parents get. So that's how that works. And hopefully that answered your question good enough. Carlos, can you have insurance for the kids paying $1,000 a month? Yes. Yes, you can. It'd be very hard, though. You have to have a lot of life insurance on the parent, because that would be a very, very large death benefit. So in this case, $300,000 is the death benefit for basically $500 a month. No, $250 a month on my girls. So if that was to be $1,000 a month, multiply it times 4, that'd be $1.2 million in insurance on the kids, which means since we're limited to half, that means I as a parent would have to have $2.4 million in insurance already. So if you already have a death benefit of $2.4 million, you could get $1,000 a month on your kid. And I've done that with folks. So it is definitely possible. But you got to make sure that you're covered first and you're covered for enough. Can you pay the insurance once a year? Let's say $12,000. Yes, you can. And can you have the cash available in a few days? Yes, you can. So the way that it works, when I set up a policy, we design it so that you can put in however you see fit. You can pay monthly, you can pay quarterly, you can pay semi-annually, or you can pay annually. So you can absolutely put it in once a year. And the cash value, when we first start the policy, the cash value is available after about 10 days. It's 10 days because you have a free look period. You can change your mind and get out of any of these life insurance policies, any life insurance contract, in the first 10 days and get all of your money back. So the life insurance companies always hold that money for 10 days before they give any type of loans. But you go through that first 10 days, you can access the cash value. Absolutely. And I have done that, so I've tested it out. Oliver, does life insurance work different when a will is attached to it? No. Life insurance, you have a beneficiary. And the life insurance company is going to pay out to whoever the beneficiary is listed on the life insurance. Doesn't matter what your will says. Like your will could say something different. the life insurance company is going to pay out to the beneficiary listed on your policy. You could have, as your beneficiary, you could have a living trust. You could have a irrevocable trust or a revocable trust be the beneficiary, in which case that trust would spell out what's going to happen to the funds. You could have your will somehow tied to that, talking about how things are going to get spread out. If you own life insurance on somebody else, that is an asset that you have, and you would want to have in your will who that's going to go to, because it's not going to pay out a death benefit when you pass away because it's based on somebody else's life. So it does work. It doesn't necessarily work differently that way, but you will want to make sure that that is an asset that's covered in your will just like any other asset. Trent, all right, thanks for subscribing. Welcome to the channel. Demons, you want to buy a Tesla. Is it better to buy brand new or 2016 model? Checked on insurance in 2016, $207. Haven't checked insurance on a new one yet. Ooh, good question. So I'll tell you one of the things that I've heard recently. If you buy a used model Tesla, I don't know if you have to go through Tesla. You might have to go through Tesla, but they are including full self-driving on the used models, even if it wasn't included when the person bought it to begin with. So they're doing some leases, and they're getting those leases back and those vehicles back, and you can buy it used from there. But what I'm hearing is they're adding in full self-driving for two reasons. One, they want people to buy their used cars, and two, they want those used cars to have a higher value, as high a value as possible. It doesn't cost them anything to add in full self-driving. So when that person turns in the car or trades in the car, or Tesla buys it back from them somehow, they're going to pick it up at the rate that a non-full self-driving Tesla would be at. They're going to get that model in, and then they're going to flip on full self-driving, sell it to somebody else, and they just increase the value of that vehicle. You do get the advantage of having full self-driving then, which they just throw in. They're going to price the vehicle accordingly, but you can definitely still get a good price on a used one as compared to a new one. So hopefully that answers your question. I don't know price-wise. Which one's going to end up being better, or what's going to fit your budget, or insurance-wise. I haven't looked into that. So that's about as close as I can get to offering you some advice when it comes to new or used. Demi, what's your strategy? What's your say on strategic rollout of 401k, 403b to max funded IUL? I like that. So right now, because of the CARES Act, and almost everybody in the country has been impacted by the pandemic, you have the ability to access the funds within your 401k or your 403b without the penalties that would normally be associated with it. You also have the ability to borrow against it at a different rate with a much different payback period than you normally would. So you have up to $100,000 that you can take out without a prepayment penalty if it's before age 59 and a half, and you can pay that back. You can put it back into the policy, or you can pay the taxes over the next 3 years. That is a heck of a deal. You can get that money out, put it into your max funded IUL, and then you could even put it back in by borrowing out of your max funded IUL. Or you can pull it out, get it into your max funded IUL, and then use that cash value to pay the taxes over the next 3 years while it's growing in the policy. A couple of different ways to do that. The other way is to just borrow against your 401k or your 403b. When you borrow against it, if you qualify under the CARES Act, when you borrow against it, you can get out now up to $100,000. It used to be $50,000. You can borrow up to 100% of that $100,000, whereas it used to be 50%, or up to $50,000. So in order to borrow out $50,000 before, you had to have $100,000 in your account. Now it's, if you have $100,000 in there, you can pull out $100,000, and then your payments don't have to start for a full year. So you can get a year's worth of deferred payments, whereas normally you would start making those payments right away on any loan that you pull out. So now you get you still get 5 years to pay it back, but you can delay or defer those payments paying it back for a full year. So those are two different ways that you can use the funds in your 401k or 403b in order to fund your IUL. Now, I do have a video on this as well, because there's a couple other ways that you can utilize funds in your 401k or funds that are going to be going into your 401k in order to help fund your policy. So look for that video on my channel. I think it's how to fund, or using a 401k to fund your infinite bank or something like that. And when I talk about infinite bank, you can consider a max funded IUL as that also, because how we design these policies, it functions the same way. It just doesn't have the same type of guarantees that come with a whole life. So typically when I'm talking about infinite bank in the videos on my channel, I'm referring to whole life policies when I go through the examples, but you can certainly do it. You can borrow against it. You can fund it the same way with a max funded IUL. So, Elementor, are you getting the tri-motor for your truck? Yes, I am. Yes, I am. Oh, Demon says Tesla doesn't take trade-ins. Well, you can always try and sell it yourself. You can always try and sell it. You'll get a better deal selling it yourself anyways. Definitely is a little bit harder, but there's people out there who will take your car. There's wholesalers out there too. I mean, there's plenty of options to take care of a trade-in. You don't have to do a trade-in to a dealer anytime. Most of the time, dealers are giving you a wholesale price anyways. You could probably call up a wholesaler anywhere and get a price. These days, you can just throw it on Facebook Marketplace and you might be able to sell it. The used car market right now is hopping. It's hopping. Raphael, who's being evicted? Basically, people who couldn't afford to pay their rent. So a lot of people, remember we had massive unemployment. A lot of people got unemployment, but a lot of people didn't. And a lot of people got fired. A lot of people just got laid off and weren't able to qualify for unemployment. Whatever the situation is, there was a lot of people unable to make their rent payment. That's why we ended up seeing eviction freezes. But those eviction freezes are basically done. And so a lot of people are getting evicted. And it's really sad watching the result of that. I saw some videos out there, and it's just heartbreaking of people getting evicted. Top Gun, 3-month moratorium on evictions in your city. Good. Yeah, there are some moratoriums. In fact, I think Donald Trump he might have extended a moratorium. I haven't paid that much attention to the most recent goings on. Been a little bit distracted with the fires and stuff going on around here. But I think there was something that they just did to extend something like that. Or maybe it's just certain jurisdictions. But yeah, landlords are definitely taking it in the shorts. Top Gun says landlords are taking it in the shorts. Yeah, it's really tough for landlords. And this is the problem with Congress not addressing it properly. If you get a moratorium on evictions because people aren't getting enough money, and Congress hasn't given out enough money in stimulus package, we'll call it. Okay, they haven't given out enough money in order for people to be able to survive when businesses are forced to close down. You're creating a squeeze on everybody that something is going to pop and people are going to be hurt because of it. This is one of those things. So you got an eviction moratorium. We do have the ability to forego making our mortgage payments, but I don't know if that was properly extended to landlords and people that have a lot of rentals at hand, people that are providing housing to people in that way. And so that creates a challenge. It creates a challenge. Makes it very difficult on landlords. Elementor, you'll never die thanks to Tesla and Neuralink. Demi, thank you. Great explanation, informations. More power. Just subscribe to your channel and loving it. Nice. Well, welcome to the channel. Happy to have you. Raphael, I know you were talking about the differences of tangible and intangible assets. Is the typical post-Great Recession to not consider your home as an asset? I guess it depends on who you talk to. I view my home as an asset because of the area that I live in. It appreciates, and typically we consider assets something that appreciates. Some people may define it as just something that creates income and not just an expense, and a lot of times people see their home as an expense. But I use my home to build equity. I access that equity in order to you do other investments. And so to me, it's absolutely an asset. However, if your home is just an expense, if you're maybe in a low cost of living area, maybe your home's not appreciating, you're just putting money into it, you're not getting a benefit out of it, then I can see how it can be viewed as just an expense and not necessarily an asset at this time. But yeah, I mean, in general, I definitely view a home as an asset, and I encourage home ownership. Sometimes, though, in let's say a high cost of living area, it may not make sense to buy a home. Might make more sense to rent a home because you're better off using that extra money that you would be spending, putting it somewhere else. So a lot of it is situational. Top Gun, personal residence is rarely an asset in your opinion. It may hold equity, but unless someone else is paying your rent, you have a liability. You do definitely have a liability, but you could, say, do house hacking. You could be renting out part of the unit. I was talking to my daughter the other day about this, about getting set up. I have her reading Becoming Your Own Banker now. I told her I'd pay her $10 if she read it, and so she's like, okay. So she grabs it and she's off reading it. What I want to get her doing is when she gets older, when she moves out of the house, I want her to be able to buy a house, and then she'll rent the rooms to her friends. Her friends will end up helping her pay the rent, and she'll essentially get to live for free or close to it while the equity grows due to all of the rent payments that her friends living with her are having. So I was telling her how that works, and it looked like she was getting it. She's very intelligent. So I think she's going to do good after reading that book. Let's see. HW3 Elementor. I'm not sure what that means. HW3. Might not just be thinking right. Oliver, would you ever be a salesman for Tesla? You'd buy from you. No, I'm not really too interested in selling cars. In fact, I don't even know if Tesla has salespeople. They just do it right on their computer. I mean, you could just buy them right through your computer. They do have some dealerships. I know we have one here in Portland, a couple hours up the road in Portland. I've never been in there, though, and it's probably just a showroom. I don't even know if they have salespeople. I did used to sell cars, though, back, it was probably 21 years ago or so. I sold Toyotas. Still like Toyotas, but I'm a huge Tesla fan and definitely going to be switching over to Tesla as I can afford to. Carlos, it's advantageous to have more than one insurance policy to create cash value. Oh, is it advantageous? It can be. It just depends on the situation. So I would say it absolutely can be because you're limited based on your financial situation. You're limited to how much insurance you can have, how big your insurance policy can be, how high a death benefit you can get. So you have the ability to get insurance policies on other people. That's one way to expand how much money you can actually put into the policies. Nelson Nash, the creator of the infinite banking concept, he had, I think, I've heard 44 or up to 144 different policies by the time he passed away. His goal, as he expanded policies throughout his life, as his income grew, his goal was to have 100% of his income going into his policies as premium payments. That is a lofty goal, and that's also my goal. I would like to do that as well. I'm well on my way. But in order to get to that point, you've got to have more than one insurance policy. You're going to have one on yourself. You're going to have one on your spouse and on your kids. And Nelson Nash did not have 44 or 144 policies on just himself. He had them on himself. He had them on his family. He had them on his employees. He had them on business partners. Everybody that he could get a policy on because he had an insurable interest, he got one on. So there's definitely an advantage to it, but it's not necessarily, the advantage isn't in just having different policies. Because if you're just getting different policies, you're paying a commission for each new policy that you sign up for. So you want to make sure that the policies are designed right, and you want to make sure they're designed to fit your financial situation. And so if you want help out with that, just talk with me, and we can analyze your situation and figure out which way is best. But I do like to see insurance on at least your immediate family members, more than just piling all all of your income into one policy on yourself, even though that's more efficient from an expense standpoint. It can be more efficient to just do all one policy because you're only paying that commission one time. You're better off as far as insurance goes, as far as covering your bases and your financial base. You're better off having insurance on everybody, a little bit of insurance on everybody. It's really important to have insurance on your kids, not because they have an income. They don't have an income oftentimes. And so some people will say, well, you don't need insurance on your kids because you're not relying on their income. And you only need insurance on people you rely on income. Well, no, but if something were to happen to your kids, that can affect your income ability, your income earning ability. And if that affects your income earning ability, you need insurance on them. Okay? If you're the sole breadwinner of your household, if you make $100,000 a year, you got a couple of kids, you got a spouse stays at home. You only have insurance on yourself. What happens if your spouse passes away? If your spouse passes away, you're probably going to need time to grieve. You're going to need somebody to help watch the kids. You're going to need somebody to help probably with the household chores until the kids get old enough to help and do that themselves. You're going to need to pay for help. So that money is going to have to come from somewhere. And where's that going to come from? Especially if you're needing time to grieve. Maybe you're not able to work. Maybe you need to go back to part-time. How's the kids going to get back and forth to school? There's all kinds of things to consider. Now, what happens if one of your kids passes away? If one of your kids passes away, I know I would absolutely need time to grieve. I'm not going to want to be forced to go back to work because I've got mortgage due or rent payment due next month. And we got to make sure that we're not going to lose the house. I don't want to be in that position, and I don't want anyone else to be in that position either. So we have to consider the ramifications beyond just, are you reliant on someone's income? And you only go with that as a consideration to whether you need insurance. Let's see, you're paying premium, but what is the advantage to have more than one, if any? Yeah, okay, so I think I went through the advantage of having more than one. The other advantage to having more than one, beyond spreading out the risks, because you really don't know who's going to pass away first. Accidents do happen. As far as a cash return standpoint, you're not necessarily getting insurance on your kid because you're hoping they're going to pass away and it's going to pay off. But the reality of it is that if they do pass away early for some reason, you're going to have that ability to have the time to grieve. But as a return on investment, a death benefit paid off in the early years has a much higher return on investment as opposed to a death benefit paid off in the later years. So strictly from an investment standpoint and building up cash value, it's good to have your efforts spread out because you just don't know who's going to pass away when. And if the goal is not necessarily to enrich yourself, this isn't about that, but if the goal is to put the survivors in the best possible financial position so that they don't have to worry about things, so that they can do the things that they want to do in life, so that you can help them reach their goals or pursue their dreams, right? You're better off spreading that out, insuring different people, and making sure you got all your bases covered. Good girls. Hey. Shaw, how high Tesla will go this week? Oh, I have no idea. I was surprised it ended up down today. We'll see how it goes tomorrow. Elementor, me too, but not until second generation Cybertruck 2023. Okay, all right. Top Gun, in James's circumstance, he is using it as an asset. That's why I said in most cases, if you utilize your home to produce income, it becomes an asset. There you go. That's a good way to describe it. Elementor, hardware 3 for full self-driving is going to be swapped out for all Tesla vehicles soon. Correct me if I'm wrong. That's what you were saying, HW3. Gotcha. I don't know the specifics on that, but yeah, I think if that's the upgrade that you're talking about that Elon is testing out right now, and I expect we'll hear more about that on Battery Day coming up on the 22nd. But he has talked about a full self-driving, or I think they called it something else. They called it an upgrade of some kind, a rewrite, I think, of auto drive or whatever they call it. That's going to happen in the next 2 to 4 weeks, and it'll be rolled out to all the vehicles by the end of the year. I think that was what I saw. Raphael said, thanks to Top Gun. Tesla, best case scenario, battery day. I have no idea what best case could be. Best case would be like S&P 500 inclusion the day before or this Friday, so that we have the weekend to kind of build that suspense and the momentum. And then battery day comes up and it just boom, boom, boom. That would be like best case scenario. Not likely to happen though. So what is the Osborne effect? The Osborne effect, I think that's what I was talking about earlier today, and I wasn't exactly sure what the name of it, what the term of it is. But I think the Osborne effect is, it may not be this, because I don't have it off the top of my head, but I think what the Osborne effect is what I was talking about earlier today on the earlier live stream, and that is where people will wait on making new purchases if they're waiting for something that is markedly better. And the way that traditional car manufacturers operate is they don't improve their cars drastically from year to year, because otherwise customers would not buy cars every single year. They would just hold on to their used car. They would hold on to the car they have until the one with the feature they want comes out. And so what the car manufacturers do is they'll just slightly improve, and only once every 4 or 5 or 6 years will they do a drastic remodel of a car. And so the idea behind that is because of the Osborne effect. They don't want people to wait. They want people to buy a car as soon as they feel like buying a car. But they don't necessarily want the person who just bought a car the year before to feel like they're kind of in old technology. That's what leads to people waiting, and it's led to a lot of manufacturers going out of business if they engage in practices where they offer too much, and they put it, they start talking about it and getting people excited about it too far ahead of time. It hurts current sales. So I think that's what the Osborne effect is. But correct me if I'm wrong, if anybody's listening and you know what that is. But I think that's what it was. HW2 is used now, sorry. Okay. Oliver, you're 28, still live with your parents in LA, very expensive living. Was thinking of buying a home in the Northwest, maybe Seattle. What's the average down payment in that region comparable to LA? I'm not familiar with the Seattle real estate market specifically, but it's also very expensive. Everywhere on the West Coast is expensive, although LA is much more expensive. I would guess Seattle is probably 3/4 to half the cost. It's going to depend on where you're at. It's also going to depend on if you're actually in Seattle or are you in the suburbs of Seattle. A lot of those will make a big difference. Average down payment is going to depend on what type of loan you're getting as well. If you go with an FHA loan, you could get 3% down payment, I think, maybe 5% down payment. If you're outside of Seattle, you might be able to find a USDA eligible loan. USDA eligible loans sometimes offers zero down payment. So it's just going to depend. Got a lot of factors in there, and I would recommend you just talk to a mortgage specialist. I have one you can talk to. He's here, but mortgages work the same all over. So if you want somebody to just talk to, there's no obligation. Like, great guy, I've been working with him for a long time, friend of mine, and he's willing to talk and help people out in planning ahead, because basically he can help you look at your credit and see how you'd qualify or what you need to do to get in a better position. He can talk to you about different down payment options that are available now. But basically, he helps people get into a position so that when they're ready to buy, they're able to qualify for a mortgage. So, but you can really, there's a ton of mortgage people out there. Your parents probably know somebody. Maybe you know somebody. Talk to somebody that's in that business right now. Doesn't mean you are obligated to use them down the road. Top Gun, Osborne effect is from a guy that advertised a product too soon. There we go. Yes. He never sold enough initial product to roll out phase 2 because people wanted the next model more and lost it all. Thank you. That was explained much more succinctly than I did it. And I was thinking right. That was what I was trying to describe. So hopefully that's what I described in my spiel. Zing, you live in a social democracy. Feel like it's easier to save money here and invest since we don't have to pay for higher education, healthcare, etc. Taxes are pretty high though. Yeah. Oh, where are you at? Are you in UK? There's definitely advantages to that. It is easier to save money. You do. I don't know that you pay higher taxes though. Um, from everything that I've seen, a lot of the countries in the EU, other social democracies like that, tend to have you tend to pay most of your taxes to one body, the federal government, right? I mean, maybe you have a little bit here or there locally, or value-added taxes or whatever. Here, we spread it all out. And if you add up all the taxes that we have to pay together, we pay more in taxes than at most everywhere else. So we pay taxes to the federal government, we pay taxes to the state government, we pay taxes to the local government. We pay taxes on our gas, we pay taxes on our groceries, we pay taxes on our real estate. We pay taxes to fund our schools locally. We pay taxes for fire districts. We pay taxes for police districts. We pay taxes for basically every single little thing. The only thing we don't do is pay all of our taxes to the federal government, and people think that we're better off because of that. And they think so. When you add it all up, we don't have less taxes, or I think we have more taxes in most cases than a lot of those other countries that consolidate that. Because one of the things that does, when you have, okay, you're from Denmark, yeah. One of the things that happens if you have high taxes, high federal government taxes that are applied to everybody, it helps to even it out. We've got really rich areas and we have very poor areas. And we end up with a great disparity among those because the funds don't go into one big pool enough. So like consider our schools. Our schools are based on our local taxes. The funding for our schools is mostly done on local taxes. We get money from the federal government, but most of the funding that makes up any type of gaps, and the federal government funding is reduced year after year. I mean, it keeps going down, and our local taxes have to make up for that. So when we have a school in a rich neighborhood, that school is better funded than a school in a poor neighborhood. And it really leads to some major disparities because of that. And we end up paying higher taxes overall. I mean, some people probably pay less because here we have basically the ability to move to a state where if we want to pay less taxes, we can. If we don't want to have income taxes, we move to a different state. If we don't want to have sales taxes, you can move here to Oregon. We don't have sales taxes. Move to Washington, you got sales taxes, but you don't have income taxes. Here in Oregon, we have income taxes, no sales taxes. So it ends up pitting state against state as well. And even for businesses, we got states vying for different businesses because each offers different incentives. It's kind of crazy. Crazy and complicated. Let's see. All the students get money from the government while studying. Yeah, I like that. I mean, it's definitely, you want to have a well-educated next generation always waiting in the wings. So I can appreciate that. Elementor, new Tesla Roadster, thought. It looks cool. I like what I've seen of the looks of it. Demi, what's the best vehicle to move 401k to have a tax-free retirement income? It depends. Depends. I mean, that's really probably the best way to approach that. I happen to like the IULs for their growth potential. But it's just that. It's potential. So is it the best vehicle? It could be. Could be the best vehicle for a tax-free retirement income. We know a Roth IRA is good. You could transfer your 401k to a Roth IRA. But what kind of guarantees do you have that you're going to have a good tax-free retirement income? You don't really have any guarantees. We assume that the stock market's going to perform, but it can also drop at any given time. And being in a Roth, you don't have taxes to worry about when you're withdrawing, but you do have to worry about the stock market performance. Move to an IUL. An IUL, you have guarantees from the market drop, but you don't have guaranteed growth. So even if the stock market's not performing, your underlying investment is protected. The money you're putting into it's protected, but you don't have guaranteed growth along with that. So there's some trade-offs there. And then that growth, that potential growth is capped, whereas the growth potential in your Roth is not capped. So we've got some trade-offs. Every time we move from maximum risk to lower risk, we end up with lower potential. Just because there's going to be some type of trade-offs for reducing that risk. Okay. Now, it doesn't always mean more risk, more reward. I think that's a false assumption. But in this case, there's definitely more potential for reward with the more risk that you're willing to take. Now, let's keep moving on. Now we have whole life policy. Whole life policy, you get a ton of guarantees. You have guaranteed growth, but you're also much more limited on that growth compared to the IUL. And then again, compared to the stock market. So realistically, I like using all of the different buckets and use them for whatever you need in order to have an overall financial picture that is solid and that you feel comfortable with going into retirement. New Roadster looks like the Air. Oh, okay. I didn't connect those two. Oliver, thanks for all the financial advice. Learning how to invest in the stock market, buying your first car, looking to purchase a home. Helped a lot. You sure are knowledgeable. I try. I spend a lot of time researching. I listen to podcasts every single day on everything from real estate to tax advice to I don't listen to them yet about the stock market because that's not really my focus. I'm just dipping my toes into it, as I tell you guys repeatedly on our live streams. But I'm just dipping my toes into it, doing some day trading because I kind of enjoy it. It's really fun for me. And I know that I'm secured financially behind that because I have my infinite banking policies in place. I have my life insurance in place. And because of that, I feel comfortable playing around a little bit in the stock market. So glad to help you, but I am constantly trying to expand my knowledge. I've been a business owner in the past for a number of years. I did pressure washing and window cleaning. I was a general contractor. I've built houses. I've sold cars. So I have a wide range of experiences, and I'm offering up everything that I know to you guys. You just got to ask the right questions to draw it out of me. And then, of course, I put the videos up as well to try and help out. So I'm happy to provide you all with as much value as I can. Shah, how do I become a knowledgeable and become independent in life? You're 19 years old. Realize that people your age are way mature and knowledgeable than you. Please recommend me something. That I don't know how to specifically answer that because I don't know you. So I can't identify what you're missing. I've only interacted with you a few times in our live streams. I would definitely be looking to help you out. I would say if you want to sign up and meet with me for a little bit, we can talk some more and we can go through some ideas. I think you're probably not, if I recall correctly, you're not located here in the U.S. either. So the things that you're going to have available to you are going to be different than we have available here. But I'm happy to meet with you and talk to you and give you some ideas, things that you might be able to try to implement where you're from or where you live at. That's the main thing. So I would say the biggest thing that you could do, I do have a little bit of advice, and this is the advice I told my daughter just the other day when I gave her the Becoming Your Own Banker book. Become financially literate. That is the greatest thing that you can do. If you can learn and understand how to move money, how to make your money work for you, that's the greatest thing that leads to financial independence. I think it is one of the easiest ways, no matter how much money you end up making in your job, okay, no matter what you do for a career, no matter what you decide to do for a career, no matter where you're from, if you understand money and economics, you are going to be able to move it efficiently, and you're going to be able to maximize what you do with the money that you do get, okay? Also understanding the tax implications of wherever you live. A lot of people, I follow the FIRE movement. Financially independent, retire early. Don't necessarily have to be retiring early, but becoming financially independent, a lot of what those guys do, I see success across all types of income ranges. So you don't have to be rich to become financially independent. You don't have to have a job that pays you $200,000 a year. It makes it a lot easier. But you have to have the underlying fundamentals in place. You've got to understand how money works. You've got to understand how society works, how marketing works, how you're drawn to make decisions based upon other people spending money to influence your decisions. There's all kinds of things to consider. But I've got a Calendly link, calendly.com/cashflowpro. You can sign up on that to get on my calendar to meet with me. I offer 20 minutes free to anybody to just have a conversation, and I'm happy to try and talk you through that and get you on the right path. So that's awesome that you're 19 years old and you're looking into this. I think that it's starting you off in a good place. You're definitely showing the term, it's on the tip of my tongue. I want to say incentive, but you're showing, you're asserting, you're being aggressive. None of those are the right term. I don't know why I can't think of it. Lost it. Sometimes that happens. Brain can't catch up with my mouth. But it's good that you're being forward in trying to find those things out. So, Top Gun, elements are depending on age. Whole life insurance is the foundation to begin your retirement on. Absolutely, I would agree with that. Learn how to use it in infinite banking, pay debt, or invest based on your savvy investor skills. Yes, I agree that I agree with Top Gun's statement there. Thanks. Used to work with Citigroup. Oh, okay, cool. Top Gun. Next step would be an IUL that you could feed with extra windfall dollars if you get real savvy with investing. Yep. Me and Top Gun have been meeting, having conversations. So he's definitely picking up what I've been putting down. Support humanity. You're back. Nice. Demi, you're welcome. Do I fish out here? Yes, sometimes. I don't even own a fishing pole or a boat or anything, but our family does. So my wife's family goes fishing whenever we go out camping. We usually catch some fish there. And yeah, it's enjoyable. Raphael, disparities will continue to exist as long as there is a disproportionate wealth distribution in America. Yeah, I mean, they're going to happen everywhere, but they're really bad right now. I definitely agree with that comment. I mean, there's always, throughout history, there's been wealth disparities and disproportionate wealth. Some societies have dealt with it better. I think as long as we have a dignified floor that we can help people that keep them falling through the cracks, I think overall we can have a better society. But we're always going to have some disparity because some people are way more motivated than others. Some people are motivated to earn. And it's not necessarily greed, but they can kind of become addicted to it. Just like anybody can be addicted to anything. And so those people have the ability to earn more just because that's what they put all of their effort into. And anything you're willing to put all of your effort into, you're probably going to end up being better at doing that than somebody else. And so we can't get rid of all the disparity, all the wealth disparity. And in fact, it's probably not healthy to get rid of all the wealth disparity. But we can do a better job. And I think it just comes down to helping people live a dignified life. If we can manage that, if we can keep people from having to live on the streets because they're homeless and whatever the reasons, if we can provide them with the mental health counseling that they need, or the health insurance, or the health not health insurance, but the health care, the actual health care that they need. If we can do that, I think we end up in a better position in society, and people are still going to be able to pursue their dreams and strive to be entrepreneurial if that's their goal, or to work and focus. Some people would rather just work and be an employee and focus on their family. That's what they get out of life. Not everybody has the same goals. So there's always going to be that disproportionate wealth, but let's just try and keep people from falling through the cracks. I think it's a lot more expensive to us as a society if people are falling through the cracks. Shaw, you came to New York 5 years ago, now living here. Oh, nice. Okay, so definitely connect with me. Because I can talk to you about all kinds of stuff. We'll be able to look at your situation, big picture, get you set up, try and identify how to build that financial base, and I can also point you in the right direction as far as things you might consider as goals in the near future, how to become independent, in your case, of your parents, since you're still sound like you're still at home, unless I'm mixing up comments here. So a lot of things we can talk about. Happy to try and help you however we can. Oliver, you're very, very fortunate. Your mom is the CFO of a business the last 34 years. She taught you so much financial wisdom. That is awesome. Can't wait to add wisdom from other experts. Financial freedom is key. Absolutely. Absolutely. That's great. That's great. So like my challenge is getting my kids interested in learning it. For the most part, they tend to avoid wanting to learn anything. They spend enough time at school learning that way. When they get home, they're like, I don't want to learn anything. And so they're very resistant to it. So that's why I got to incentivize them. Got to figure out how to incentivize them. But even offering some incentives makes it's still difficult. They spend so much time in school these days. Although not right now, because everybody's still home. Elementor, this is the best year to learn stocks and financial responsibilities. Yeah, I mean, as somebody else used to say, the best time to learn that stuff would have been 20 years ago. It's kind of like planting a tree. When's the best time to plant a tree? 20 years ago. When's the next best time? Today. So when was the best time to learn about stocks and financial responsibilities? 20 years ago, at least. When's the next best time? Today. Jones, initiative. Not sure what that's in reference to. Oh, initiative. Yes, that's the term I was looking for. You're showing initiative. Thank you, Jones. It was on the tip of my tongue. I couldn't get it out. Elementor, you're 40 and still learning. We all are. We all are. I'm 42. Almost 43. I'll be 43 next month. Jones, was initiative the word you were looking for? Yes, it was. Thank you very much. Oliver, when you were in high school, instead of going out with friends, you would ask her business questions, and we would talk for hours and hours. That's amazing. Yeah, you had great initiative as well, and I'm sure it is paying off. I have no doubt that you have a solid foundation of financial knowledge. So that's great. Maybe you won't be an entrepreneur someday, but creating an entrepreneurial mindset will take you far. Absolutely. Not everybody has to be an entrepreneur. I mean, a part of this whole financial journey is figuring out where you're good at. Where is your area of expertise? Not everybody can be a teacher. In fact, like I love learning. That is my favorite thing to do is learning. I don't think I'm a good teacher. I can speak because I've forced myself to on YouTube videos. I've always been kind of introverted. I don't go out and party. I don't go out and make small talk with people. But I've discovered over the last few years that I really like doing this. I like interacting with people, and I like giving value to people. And the best way for me to do that is to just pull it out of my head as questions are answered. I think I have less ability to put it into like a curriculum. I'm not a good person to design a way to teach you how to learn that. I just know that I like the details, and if I can get the details out, you guys can figure out how to put it together for your situation. So I don't think I'm a good teacher. I don't have the ability to say, do steps A, B, C, D, E, F, and that's going to put you in the right position, as far as learning that item. Not necessarily the case. When I'm trying to think about, when I do my videos, if I wanted to write it down and create a script and things like that, I can kind of do that. And it works out okay, but then I have to reference the script. Otherwise, it's not going to come out the same way. But when you ask me a question and we're doing this live stream, it just flows right out of my brain, comes through my mouth, and you guys get the benefit of it. If you wanted to ask me to repeat that, I would not be able to, because I would end up thinking, what did I say? I'm going to try and repeat what I said, but I'm going to forget how it came out, because it was just a stream of consciousness that's coming out and answering these questions. So it's tucked away and it's hidden in there, and you guys are pulling this out of me. So I love this. I love doing this format. It works great for me. You got to figure out what's going to work best for you. So for you, it may not be entrepreneurial. It's like there's that comic where you've got a fish, and it's something about if you ask a fish to climb a tree, they're going to look like an idiot. The fish is going to look like an idiot, okay? And they're going to look like a failure. But that's not what the fish was made to do. The fish is made to swim. Now you put the fish in a pool and it's going to look like a genius. It's going to look like a professional, right? You just got to find out where's your pool. What's your area of expertise? And that's the challenge. That's the challenge. And it may change over time too. So like when I got out of high school, I was really introverted. I would have never thought, anybody that knew me, even my wife when I got married, like I was completely different than I am now. Never would have thought that I would be doing something like this. She never would have. She's seen a major change in me over the last 5 years or so. And I've really come out of my shell. I've figured out kind of what excites me. I've always known that I like to help people, but how to help people has been the struggle for me. And I think I'm kind of finding my footing. So let's see. You're welcome, Shah. You're welcome. Raphael, potential, being proactive. Yes, all of those things. All of those things. But initiative described it perfectly, I think. Elementor, today, all day. What's that in reference to? Today, all day. Oh, you're 40 and still learning. Today, all day. Maybe that's what you're continuing on about. That's good. Can you know what religion you believe in? I don't tend to talk about that. I'm not very religious. I grew up in, originally, my family was Mormon, and my mom switched and basically became a Christian. I joined her in that. I went to the Christian church for a long time, and then I'm just not religious at all right now. So I've decided to focus on other things. So hopefully people don't hold that against me. I certainly don't hold any of that against other folks. Each person is going to believe in what they need to believe in. That's what I think it comes down to for me. I think there's value in it, even if I don't necessarily follow any particular religion. I think that there's value in it for people. And it's going to be it'll be different. The value of it's going to be different for different people. So that's where I'm at. Oliver, your first job out of college was that you were a behavior interventionist for children with autism. Nice. You would love to get into the self-development coaching for teens. It keeps you humble and wanting to learn. That sounds great. My wife actually works for a nonprofit that it's called... it's CELIA is the term. I can't think of it right now. I always just call it CELIA. Sustainable living and learning. Sustainable living, learning, and earning with autism. I think that's what it is. I'm not sure about the S. But what they do is they provide housing and basically mentors, coaches, people that live there with them. They help autistic people live on their own, and they teach them how to live on their own. And so they transition them from housing, where they have somebody living in the house and helping them out. They transition them into housing that they can live on their own, and then there's somebody living near them that is still close enough that they can help out. So pretty cool. Top Gun, James, I think you will become wildly successful if you continue to create tremendous value that you've been doing for me and others. Thanks, I appreciate that. That isn't necessarily the goal. For me, I get value just by helping people out. So whether that leads to long-term success or not, it's secondary. But I'll tell you, the greatest thing for me was beyond being able to figure out how to provide value to people, was my ability to understand finances and how money works, how money moves, what to do with it. And not just because I can teach other people, but back when I had my business, I had a lot of money that flowed through my hands. We did a lot of work, and I worked my butt off, and we had a lot of money to come through my hands, but I wasn't the best manager of that business. There was a lot of things that if I had known then what I know now, I would be in a wildly different financial situation. I'm doing successful now, but I mean, you're talking way, way ahead. I would have been way, way ahead. So, um, just knowing that. So when I learned how money moves, when I learned more about financing, it allowed me the freedom to be able to start doing this and to start teaching other people. Not really teaching. I guess it's kind of teaching, but it allowed me the time and it basically just allowed me to have the time. It gave me the freedom to be able to do this, because this has been a process for me to create this channel, and even just get to over 1,000 subscribers took me almost a year and a half, or just over a year and a half. That's a long time. And I was able to do that because I had that freedom, that understanding how to use money and move it effectively in my life, what that gave me. So money is not everything, but it gives you a lot of freedom to make mistakes. That would be a good way to put it. Demi, strongly agree. Flourish and cultivate on your strength. Yeah. Let's see. Raphael, your marketing for Tesla viewers is key for your channel right now. It's what brought me in. I know. So here's the deal. I spent the last year and a half making content around dynamic banking and infinite banking. My goal is to help people understand how to move money, because I think it's key to many people's success, no matter where you're at on the income spectrum. There's a wide variety of people that make a different amount of money, but everybody can benefit from knowing how to move money. So that's what started me in this. It's been a struggle to get my channel to grow, because I'm not a teacher at heart. Like, I don't have that background. So everything I've been doing, I've been learning how to do it as I go. I just kind of jumped in with both feet. If you watch my older videos, they're like not very good quality, but the content is good. And so it took me a while to get comfortable talking to the camera, to get the equipment that makes it look better, to get the editing down so that I can put videos together that people may actually want to watch, so that they can focus on the content and learning. And then I just get more comfortable with what works for me. And what works for me is this type of interaction. Like, I didn't figure this out until I hit that 1,000 subscribers, and I started to do live streams. And I started to do the live streams right before I hit that 1,000 subscribers. And doing that, it was like, even between last year and this year, it's like, I don't know, it just feels different to me. Like, I am so energized to get on here and talk with you guys. It's unfortunate that we only have a handful of viewers on this live stream, because I would love to see the folks that we have on the Tesla live streams. I would love to see them get on this and learn how to expand their knowledge of what to do financially. So we'll see if we can get there. But yeah, I noticed when I did my first Tesla video a couple of weeks ago, it was immediately the most watched video I'd put out. So over the last year and a half, like, the most views one of my video has had was about 5,600 videos. I did that Tesla video, and in 2 days I had over 8,000 views. And I was like, whoa, there's some excitement here around Tesla. And I realized people are as excited as I am about it. I'm going to go ahead and make a little bit more content. I'm going to do a live stream on it. You know what? That sounds like fun. So I did that. And then the number of subscribers I had it's almost doubled since I did that Tesla video. My numbers of subscribers almost doubled. So while it took a year and a half for me to build up to just over 1,000 subscribers, I now have almost doubled that over the course of 2 weeks, 3 weeks. So it's been incredible, and it's definitely led me to create more content in that regard, because I know that there's a thirst for that, and I've got a ton of other videos out there that people can continue to watch and learn financial education wise. But I know that if I get my subscriber count up, no matter how I get it up, I'm able to start exposing other people to these concepts. People that would not normally stumble across that. People who aren't going to be out looking for infinite banking. Like the number of people searching infinite banking is pretty small on the internet, on YouTube. But there's so many people invested in the stock market, and most of these people are probably just exposed to your typical financial guru who says whole life insurance is terrible, buy term, invest the difference. I couldn't disagree more with those statements as far as the potential of what you can do with those products. In general, those products are terrible. Like whole life insurance, I would never buy that. I would never recommend somebody buy that if they're doing it as an investment, or even with a traditional design. If you're doing it for life insurance, it's just an expensive form of life insurance, and it grows in cash value, but it takes forever to do it. It's got to be this specially designed policy, the way I design them. I'm 100% on board with that type of life insurance. 0% on board with the traditional design of life insurance. So I'm glad that my marketing, I mean, it's not even really my marketing, but my efforts, I'm glad that my efforts at expanding the pool of people watching my channel, it has worked, and that it brought you in, because I'm hopeful that we'll be able to expose other people to these concepts and everybody gets to benefit from it. Oliver, would you say your wife is an extrovert? Yeah, maybe. I mean, she's not a big extrovert, but she has no problem talking with other people. Like, she can have regular conversations with people anytime. Her dad is the exact same way. He can just go up and start talking with people and have a good interaction. I cannot do that. I have to have something to talk about. Otherwise, we'll just kind of sit there twiddling our thumbs in uncomfortable silence, because I am not a small talker. However, when you get me talking about something that I'm interested in, I can go on and on. If you're talking about something, I'm always a good listener. So whoever I'm with, if they're talking, I love hearing other people talk. I love listening to their experiences. But me offering my own, it's like I got to have something substantial to talk about. Otherwise, I'm just kind of fumbling around. So let's see, Oliver, your girlfriend is a huge extrovert and you're an introvert. We're still trying to mesh personalities. How did you guys do it? Good question. I don't know. I guess, so me in general, I'm very laid back. So while I tend to be introverted, more so when I was younger, I don't let things bother me. I don't get anxious. And so for the most part, I'm able to just go with the flow. And so that makes it easy for me and her to get along, kind of no matter what's going on. It also helps that I think we have a lot of respect for each other. And so we can have differing views on things. We may argue about little things here or there, but nothing major at all. And so we've been married for now this year is our 20th wedding anniversary. So coming up at the end of this month is our 20th wedding anniversary. And that's how we did it. I mean, we did it because we respect each other. We respect if we have a different opinion on something. And yeah, I mean, you just got to be willing to forgive if there's an argument about something. I have no problem saying sorry or saying maybe I miscommunicated, or I tried to or maybe I understand this different than you were trying to express it, or however you want to go about saying that. I don't have a problem with that. So I don't have a big ego. I have no problem saying sorry if I did something wrong. And we have to assume good intentions. So I have good intentions. I have good intentions in regards to everything that we do family-wise. And so if she gets mad at me for something, I basically just have to explain to her what my intentions were behind that. I mean, I think she knows that I have good intentions too. So she doesn't take it as just an excuse when I talk about it. People are going to have different views on things, and you've got to understand where the other person's coming from. And you've got to be willing to understand where they're coming from. So hopefully that'll help you out. Top Gun, success is not a dollar figure. Its ability affects things in a positive manner. Parable of the Talents. If you will allow me a biblical reference. Sure, of course. Jones, if one has 400,000 cash, could one retire in the U.S. drawing funds from some sort of investment of these funds, yielding something like 3,000 a month? What investment would that be? Are you saying that you would, at 3,000 a month, you would be comfortable retiring on that? That seems like a pretty small amount, and let me see what the numbers bear out. At 400,000, the 4% rule would give you 16,000 a month, or 16,000 a year, which is not to the 3,000 a month that you're looking for. Theoretically, an IUL, the Index Universal Life Insurance, could provide that. What I see in potential payouts, this is going to be contingent on how the stock market continues to perform. But when we look at an income stream in retirement for an IUL, you can typically pull out about 10% a year. And as long as you're using a participating index loan and the stock market is having decent returns, you can do a 10% pullout every year for the rest of your life. Okay? In this case, $400,000 cash, that would be about $40,000 a year. That would meet your yield that you're looking for there. If you have your money in the stock market, you basically need to go with the 4% rule. The 4% rule would give you $16,000 a year. The 4% rule does not guarantee that you won't run out of money, but it's highly likely that you won't run out of money. Okay? It's going to depend, of course, on how the stock market does. You have more flexibility with the IUL in this regard. If the stock market doesn't perform, your underlying balance at least does not go down. It only goes down when you take money out of it or you borrow against it. So it provides you with flexibility in withdrawing that you don't get if you're just in the stock market and you're going and using the 4% rule. So yeah, I think I would answer your question with that. I would look to an IUL. You could possibly do it with a whole life policy, but the yield is not usually high enough. A 4% return on a whole life policy is probably not enough for you to be able to pull out 10% throughout retirement year. You're probably going to be, it would probably be enough to pull out the 4% rule for sure, maybe 5 or 6%. But that still wouldn't get you to $3,000 a month. So I would say the best choice for that, in my mind, with my experience, there may be other things I'm not familiar with out there, but I would say the IUL would be a good choice for that. Blessing, late night, nice to see you. You too. Raphael, here for the journey. Nice. Top Gun, Tesla day trading to marriage counseling. You got it covered. I have a wide range of experience and talents. So I never really excelled at anything. I wasn't like a professional athlete in one sport, but I was always pretty good at everything. And so you get the benefit of that. I may not be able to advise you like a professional tax advisor would be able to advise you. Well, I would say I absolutely can't. But I know enough I can point you in the right direction. And I kind of also know enough to say, I'm not the expert in this. Here's some ideas. Go talk to this expert. So, Oliver, do you only get taxed with stocks profit when you transfer it to your bank account? No. If you're doing day trading, you'll get taxed anytime you have a profit, and it'll get taxed at your regular income tax rate. There are ways you can minimize that. But for the most part, understand if you're doing day trading, it is not only taxed when it comes out to your bank account. Let's see. If you short a stock, transfer to another, is that taxable even though you didn't send it to your bank account? I may not be familiar with exactly what you're talking about doing, but if you lose money on a stock, that counts against any gains you've made in other ones and that you've taken. So if you've lost money on the stock, you have what's called basis. When you buy a share, you now have a basis. Your cost in that is the basis. And anything you have above that, if you make a profit on that, if you sell that stock for anything above that basis, that's considered profit. That's considered income for you. It can be taxed as regular income, or it can be taxed as capital gains income. If you hold that stock for more than a year, it can qualify for capital gains income, which is taxed at a lower rate, sometimes 0%. If it's less than a year, you're likely going to get taxed at your regular income rate for that. Now, you have a basis in that, your cost. If you sell that share for less than your basis, you have a loss. That loss can count against other gains, or you just have a loss, and you might be able to carry it over year to year. Maybe not in this case. Not exactly sure about that. You'd have to talk to an accountant. This is where I would advise you to seek a professional advice. But when you have a loss, no income, nothing to get taxed on, because you didn't actually gain money. So if you lose money, sell that share or transfer it to another stock, meaning you sell that share and you buy another stock, you basically you're in that other stock now at that new basis level. So you're not, if you put 5,000 in this stock, you lose 1,000, you're down to 4,000, and then you cash that one out, you buy another stock for that 4,000. Your basis is now 4,000. It's not 5,000, but you do have $1,000 of loss that you can claim. So if this other stock that you bought goes up, if it goes up 1,000 and you sell it, you're still even if it's within that first year. Okay? If it's not within that first year, you don't get that loss that you get to count unless you can carry it over. That's why you got to talk to your accountant. But you're only going to go by capital gains on the other one with the growth on the other one. So you may not have taxes there, although your capital gains is going to be limited based on your overall income. So hopefully that answers that question. Jones, thanks for your reply. You're welcome. You're welcome. Okay, I want to get back to this illustration that I went through because I'm kind of excited about what the possibilities are. And I don't see any more questions at the time, but if you guys have questions, put them in there. I'm glad you guys asked some awesome questions. This definitely turned into quite a long show. A lot longer than I expected since I didn't have any voicemail recordings to go over. But let me go back to this illustration. I want to show you guys how these indexes work and why there's such potential. So going back to these indexes, we went through why I like these ones. So let's look at not just hypothetical returns, but actual returns of that index over the last 10 to 15 years. And if any of you ever talk to me and get an illustration, all of this will be included in the illustration, okay? So, I'm almost there. Okay. So these are our historical index rates. It shows you year after year what the actual index change was. Whatever index option you choose, what gets credited to the policy if you use that index option. Okay, so we've got two columns for each of these. This one is the standard one. This one is not the bonus one that I have opted in for. The standard ones are okay, but you have much more growth potential if we do the bonus ones. This one is our bonus allocations. This is one of them. This is the free option. The free bonus option with this product is a 15% bonus. And these are the different index options. But what I chose was the select index allocations, which offer a 40% bonus. Now, the S&P 500 index, if you opt for this one, it has a very low cap rate, 8.25%. I don't like this one. I think that cap rate is too low. Even with that 40%, it's not enough. It's not enough because of that 1% charge. So I don't recommend getting into this product and using this particular index because I'm not happy with that cap level. Okay. The blended index has a little higher cap, 13%. It does pretty good. But the best ones, in my opinion, are these two. And these are the two that I signed up for my daughters. The Bloomberg Index and the PIMCO. These two, remember, uncapped, and you're going to see the advantage of that here in just a second. So these are actively managed indexes. They're volatility indexes, so they're not meant to go up really high, and they're not meant to go down really low. So what we see here is on a year that the S&P 500 gained 13%, this one gained 6% because it's managed to avoid the ups, the real high highs, okay? Now, we get 150% participation rate. So that means what gets credited to the policy is right here in this column. So if we get a 6% return, we get 9% credited to the policy. Sort of. That's before the bonus. So you can see here at the bottom it says the historical interest rates shown do not include the 40% guaranteed bonus. Okay? So we get that 9% credit, and then we get the 40% on top of that, which means the return that we're going to get credited for is actually going to be over 13%, or right about 13% for that year. Now, over the last 15 years, there's only 3 times that this one went negative. 1, 2, 3, right here. So 3 years that it went negative, and 1 year that it was just over 1%. Okay? The rest of the time, we saw almost 3%, 6%, 5%, 8%, 8%, 6%, and then a couple years where there was major home runs. And that's down here at the bottom. So what happens in those years? You can see what we were actually credited, 8%, 9%, 12%, 10%. And this is before the 40% bonus. Now we do have these couple of home run years. So check this out. 22%. Add the 40% bonus and you get a 30% credit. That's more than just a home run. That's a grand slam. That is a grand slam. And over the course of the last 15 years, this has averaged over 8%. Okay? And then you add that 40% bonus on top of that. Now you're looking at over 11%. Over 11% is what you would have been credited over the last 15 years if you were using this index option. Now this illustration that I'm doing is based off of a 6.73% average. So when I say I'm putting $3,000 a month or $3,000 a year into a policy for my daughter, and she has the potential at a 6.73% growth rate, she has the potential to pull out $240,000 a year in retirement for a pension. In this index, it's possible that she could end up with an 8 to 11% return if the stock market performs similar to how it's done in the past. Those numbers will just get really silly. You're talking double, maybe $500,000 a year that she would have in retirement based off of putting $3,000 a year. It's hard to even believe, and we're limited on how high we can illustrate these, which I like, because I don't want to illustrate these things and get people thinking that they're actually going to get 10% return. Because if I put 10% return on here, you're going to think you could put $1,000 a month into, or $1,000 a year into this thing and retire in riches. When, that might be best case scenario. It may not be a likely scenario. And you don't want people betting their retirements on that. So I like to tone it down. A bit. I like 6% average to figure usually. I think that's a pretty good possibility. I think there's a strong possibility we can see around a 6% return. We may not see, like we've seen over the last 15 years. We had a pretty good last 15 years. But if you look at the actual returns in the S&P, there was some pretty big down years sometimes. We had a negative 38%. Also had some really big ones, 29%. But as long as we have the uncapped option, we can take advantage of the big years. In this case, we had a couple of home runs. This, what would have been a home run year, was capped at 8.25%. You add that 40% bonus, you get an 11%. So while the stock market did really well, you're really limited because of the caps in this regard. So I like the uncapped options. They're just, the possibility the possibilities are incredible, I think. So I'm excited about this product. That's why I got it for my daughter. Let me go up and show you what it looks like in the illustrated returns. Just briefly, and then I'll check the chat, see if we have any more questions, and then we'll wrap it up, okay? Here we go. So if we look at retirement age, you can see we put in almost $3,000 a year. $159,000 is what she put in, is what she will have put in if we max this out all the way up until age 65. Okay? And then she has the potential to pull out $242,000 a year. By age 72, she will have already pulled out almost $1.5 million. So on $159,000 over the course of her life, even just 6 years into retirement, she's already got $1.5 million out almost. Pretty neat. It's definitely a possibility to happen. Okay, none of these things are guaranteed because you're taking on a little bit of the risk here. When it comes to these IULs, you have the potential, you have a greater potential for growth. They'll limit your losses, but you do still carry a greater risk because your growth is going to be reliant on the stock market and those indexes. Okay, so good possibilities, certainly enough to take a risk. If for some reason this policy does not perform, the cost of the policy is very inexpensive. Let's go down to the cost of the policy. You can see my total charges on this policy. $600 in the early years. $600, $700, $800. It slowly goes up as she gets older. So while these charges are very low in the beginning years, that's where we want to start to get this growth. And if it's performing and we're getting separation between the growth value, it's going to easily pay for the cost of the policy. So then when we get down the road, if for some reason, let's say the stock market doesn't perform, or I decide to lock it at terrible times every single year and my returns just stink. If for some reason I'm not happy with how it's performing, I can always transfer out of this. I can do a 1035 exchange. We can move it into a whole life policy and get the guaranteed returns that those offer. So that's what I really like about these policies for kids. You have a really great growth potential over the long haul. You start off with very small expenses, and so when you're max funding this policy, it allows it to grow even quicker. But we have outs. We have backup plans if for some reason this doesn't perform, if something changes that we can't foresee right now, we have ways that we can get out of it. So hopefully that was helpful to you guys. I'm going to check the chat, see if there's any other questions that we can address. Let's see. Raphael, because you lack a steady income, do you think locking money in a CD is worthwhile? Or keep playing the stock market, or not enough info? I would say not enough info. Steady income is not necessary. Okay, steady income is not necessary. I would think we should have a conversation about this. I would recommend signing up, have a meeting with me over Zoom, and we can talk about your overall picture, because then I can get specific. But what part of that financial base, what part of the base of that pyramid do you have covered? Where are you lacking? Because even with a steady income, we can help get that base set up. And if you have that base set up, it opens up the options to you at what you can do safely. Okay? So playing in the stock market with a lack of a steady income, that's not very safe. I mean, it doesn't mean you won't have success. It doesn't mean you can't have success. You might get lucky and become a millionaire practically overnight because you happen to make all the right moves. Is it likely? No. I mean, historically, the odds are highly against that happening. Okay? And traditionally, you're better off playing the odds. Okay? CDs don't pay you hardly anything. CDs right now are garbage. You're almost better off just putting your money in a high yield savings account, something you have access to. You lock it into a CD. If you need access to that money because you have not steady income, you're going to cash out early and you're not going to be able to get the returns that you were hoping to get. So that means you're not going to be able to get into a long-term CD that might pay you a little bit better rate, although all the rates right now are not good. So you might be stuck to doing a 6-month CD, which is even worse. So those are not good options. There are better options out there. One of those being the insurance policies that I deal with. Those are great options for people that do not have a steady income. How we fund them is very flexible. Having access to them is key. Having access to those funds. And then what do those funds do when you've accessed them? Like the whole key behind the infinite banking concept that I teach and the policies that I designed is that when you borrow your funds out of, or you borrow against the funds in your policy, it stays, the money that you actually have in the policy stays in there compounding. So as soon as you put it in, it's going to compound for the rest of your life. So the earlier you get that started, the better off you're going to be. And borrowing against it does not interrupt that compound growth. If you get a CD and you need to access those funds, you're interrupting that growth. You're interrupting it as soon as you take the money out because they're no longer going to pay you interest on it. If you have your money in a checking or savings account, as soon as you access that money, it's no longer available to you. They weren't hardly paying you anything to begin with, but if they were paying you a 0.01% interest rate, that's a very small amount that will eventually compound, but that stops. When it comes to the infinite banking concept and the policies that we designed, it's going to compound for you for the rest of your life, whether you access it or not. So a lot of good reasons to get into those. So I'd say continue your education in this. Costco, can you help me create an insurance policy? Absolutely. Absolutely. Calendly.com. I will put this in the chat. But if you go to calendly.com/cashflowpro, calendly.com/cashflowpro. If you go to that link, you can just pick a time that works for you. You can see my schedule right there. Pick a time that works for you and we'll have a conversation about it. I can do an illustration for you and you're welcome to do whatever you want with it. We can set up a policy. You can shop it around. Make sure that what I'm telling you and what I'm showing you is legit. You can find out how other agents design these things. You'd be hard pressed to find one that's designed better than I can do it. Because my goal is to absolutely give you the best design that I can. That's my goal when it comes to these. It's not just that I want to do it that way, but I'm able to do it that way because my overhead is minimal. I'm just a one-man operation here. I don't pay for marketing. I don't buy leads. I just do a YouTube channel, and that doesn't cost me anything to do. I don't promote that YouTube channel. I just put videos up, and people come to me. So my cost from a business perspective is as low as I can possibly get it, which means I don't have to charge more for each policy that I write. Each person has a finite amount of time, right? We all have a finite amount of time. How much you get paid for that time is going to depend on how much free time you have. The people that have more free time are okay earning less money for each bit of time that they spend, on other folks. So my business model is not reliant on me maximizing my commissions. Okay, I do not need to maximize my commissions in order to survive, in order to bring home a good paycheck. I can minimize my commissions. I can cut it to the bone and still live a pretty good life. Not just because it pays good anyways. It still pays pretty good. But I know how to move my money. I know how to maximize my cash flow. And because of that, you guys get the benefit of that, knowing that I can design these policies to maximally benefit you and give me the minimum commission. And it's not other agents out there, just because they may design it to not minimize their commission, it doesn't mean that they're a bad person, doesn't mean that they're greedy. They just may have a different business model. They may not be able to keep their business going if they minimum funded these. Because some of these policies, like on my kid's policy, if I design a policy like this on your kid, I'm going to spend the same amount of time designing this and setting it up as I would on you or anybody else. They don't take any longer. But the amount of commission that I get because of the way I designed this and the minimal amount of insurance that we put into it, I probably get just a couple $100 worth of commission on that. Okay. It takes a few weeks to process this. In the scheme of things, that's a pretty good dollar per hour rate. It's probably like 30 or 60 bucks an hour is what it ends up being. I'm okay with that. I can handle that. The way some other agents design their policies, though, like I could do that same policy, the same amount of insurance that you're doing, and I could triple what I get paid on that. Meaning I could bring in a couple $100 an hour instead of minimizing it. In that case, I may have to do that because my business model requires it. Because I have an expensive office in a nice part of town and I got rent to pay there. I've got employees and I've got to be able to cover their social security taxes and all the employment taxes that come along with that. And I want to pay them a good wage. If I had employees, I would want to pay them a good wage. I don't have that right now, so I'm able to offer you my time, my expertise at the lowest cost I can, which helps you maximize your cash flow. So happy to help you create a policy. Go to that link, sign up for a meeting, and see what we can do. Top Gun, please don't do a CD. Just don't. I agree. Top Gun, you bet James can do it best because it's properly structured whole life insurance. Yep. Top Gun, 6 to 7% tax-free with extreme liquidity to capitalize on opportunities or crises. Well said. Well said. Let's see. CD is like 4% tops. Are there any CDs at 4%? I thought they were like 2%, 1.5%. I haven't looked at them lately, but yeah, you're right. No death benefit or living benefits. Yep. Oliver, is there a penalty for canceling life insurance before the term is over? No. Essentially, no. There can be. There can be with IULs. There are surrender charges. But we design these policies to fit your situation. Okay? And we also design them to be very flexible. So if something changes in your life, because we max fund these policies, you actually have flexibility that if you need to cut back on what you're putting in any given year, you're able to do that without risk of the policy imploding. Okay? So essentially, no. There's not a penalty. When it comes to whole life, there's no penalty to cancel. You can really cancel at any time. You may end up paying taxes, though, if you actually cancel a policy and you have gains in it. You may end up paying taxes on those gains. For the most part, there's other ways to get out of having to pay premiums without actually canceling the policy. There's what's called a reduced paid up option. With a reduced paid up option, the insurance company, you tell them, you say, I would like to turn this into a reduced paid up. That means you're going to take any cash value that's in the policy. They're going to tell you how much insurance that will buy you right there, paid up, no more premiums paid into it. Your policy will turn into a reduced paid up. You cannot contribute any more premiums, but they're also not going to charge you anything else. You can still access the policy just like you did before. You'll have cash value. It's still going to grow. You're going to get dividends. Your death benefit will still grow. You just can't add any new money into the policy. That is a great option if for some reason you want to stop paying your premiums. And the way we design these, a lot of people do that after 7 years. If you do it after 7 years, we can design a policy that's really efficient that way. So you can sign up for a 7-year commitment. It allows us to minimize those insurance costs and maximize the benefit to you. You don't have a long-term commitment. You can move on and do whatever else you want to do. We have a lot of people that do that in setting up. It's basically like they transfer their emergency fund to it, or they transfer funds that they would want to be able to invest in real estate with. But they don't necessarily want to make a lifelong commitment to paying insurance premiums, right? Now, I think once you get into doing this and you start to see the benefits and you realize the access to the funds and the compounding, you'll probably want to pay it for the rest of your life, because every dollar you put into that is going to do so much more from you than anything else you can do with it. And you can do this and you can do other things with it. So it's not like you're having to make a choice. You can put money into the policy, and because you still have access to it, you can do other things. So ultimate in flexibility. That's why I get so excited about it. So let's see. Top Gun. Plus you have to pay tax on a CD. Insult to injury. Yes. Yeah. Taxes. Raphael. Yes, but your understanding is that CDs don't require as much input. With no steady income, do you think CD makes more sense? No, and I think I went over why that makes more sense. You don't have to have steady income. I would definitely talk with me about it. I'll definitely tell you if it makes no sense to get into one of these policies based on your income situation. But they are very, very flexible. And even with just a minimal amount each year, we can get you set up on something that makes way more sense than a CD. I need to take a drink. Yeah, Top Gun says you should talk with me for a free session. He can get you a real world solution. Absolutely. Carlos, do we have to pay that policy for that long? The kids policy? No, you don't. It can be very flexible. How long you decide to pay for something is totally up to you, and we can design it to match. Okay? These policies, the IULs in particular, work best if you fund them like a retirement policy or a retirement account. And how do you fund retirement accounts? You put money into them steadily until you retire. So in my opinion, that's the best way to fund these. We can certainly do funding in shorter periods, but you're not going to get the benefits you would otherwise. I mean, you're not going to get the full benefit of the policy. This policy would probably do just fine if you paid into it for 10 or 20 years, max funded it, and then stopped, because it's a very, very small amount of insurance overall. We've designed policies in whole life policies, like I said, 7-year pays. I've done 3-year pays that work out. If people want to put $500,000 into a policy over the course of 3 years, at the 7-year mark, we can turn it into a reduced paid up. But if they only put in that $500,000, we can still make those policies look pretty good. So no, you don't have to make long commitments. We can basically design these to fit whatever your funding is. You just got to talk to us. You got to talk to me. Tell me what your preferred funding period is, and we'll see if we can design something that will fit that. Top Gun, join the Oregon Cash Flow Pro Discord server. You're pumped to see that this is happening. Yeah, me too. We have, last I checked, we had 10 people that had joined it already. There's plenty of room for other folks in there, but I have a couple of different rooms in there. We have a couple of different channels in there that are exclusive. So you got to go to our Patreon link. It's in the description. If you go to our Patreon link, you got 3 levels. There's 3 tiers. You've got for $1, that gets you into the basic Discord channels, the general chat and the marketplace chat. It's where most of my subscribers reside, because most of my subscribers got in on my Tesla podcasts or the live streams. So they're interested in the market and what the market's doing, and I wanted to provide a space where we can continue to talk about that when I can't be on the live stream. So that's what we provided for that. I put it at $1 minimum, so it's a very low barrier. It's $1 a month, gets you in there. Very low barrier, but it'll hopefully keep trolls out. That's the idea behind. That's the idea behind it. Boy, I'm gonna have to stop for today soon because my voice is gonna go. Or I got to remember to keep drinking water. The second level, $5 a month. $5 a month gets you into the chats that are focused on things like this. Chats that are focused on tax savings, investing, infinite banking, dynamic banking. So I wanted to provide a second tier where less people will have less people in there, but it'll be geared toward people who are focused on improving their financial literacy and their financial situation. And we're going to be able to share back and forth what's going on. People can ask questions, and we can help each other out. The third level is $50 a month, It's inexpensive for what it's going to be, but it's our cash flow mastermind group. And that one's going to be limited to probably about 50 or 60 people. And the idea is we're going to have a small knit group of people that we can get comfortable with. We're going to have basically our own little community of people who are committed to helping other people in that group. So we've got folks. We're going to have real estate investors in there. We're going to have wholesalers that are in there. Top Gun, I'm expecting you to come in there. We're going to have people that know about taxes. We're going to have people that know about infinite banking and dynamic banking. And I will be more active in that mastermind group than I will be in the other ones overall, just because I love to surround myself with people that are trying to better themselves. And the people, I'm interested in all of those same things as well. So we're going to be better together. Join the Patreon. Pick the level that matches wherever you're at best, but it should easily pay for itself. That's the goal here. It should easily pay for itself. Now, when that $50 mastermind group fills up, I'll probably raise the price and make it so that it's a little bit bigger of a barrier for people to get into it, just so we can limit it to people who are actively interested in engaging and helping each other out. But we'll lock in the rate. We'll lock in that $50 for whoever gets in first. So the first 50 or 60 people that get in that's your rate forever. I'm not going to raise that up. So we'll build our community there, and we're all just going to benefit. We're all on this financial journey together. So I definitely join the Patreon. Thanks for bringing that up, Top Gun. Oliver, did you have to get a special license? Is your business a sole proprietor? I did for insurance. So I'm licensed to sell insurance in probably about a dozen states now. I just expand. When I get somebody in a new state that I'm not licensed, all I got to do is apply, and I get a license in that state. But each state wants their little bit of money. So each one just wants to get a little bit of money from me so they can say I can work in that state. But that's all I need. That's what I needed for a special license. Other than that, I didn't need anything else. And I am a sole proprietor, but my business is an LLC. Here in Oregon, and actually everywhere, as an LLC, you can set it up as a different type of tax entity. You can set it up as to be taxed like an S corp, or you can set it up to be taxed like a sole proprietor. So currently it's being taxed as a sole proprietor, but I'll probably have to change that as my income grows. Tyree, you want to get into the life insurance industry as an agent. Decided that college is not for me. Should I book an appointment under? Do the free one first. Just do the 20-minute free one with me. We can definitely talk about that. Absolutely. I'm definitely willing to help anybody get involved in this. It can be life-changing. I mean, it can definitely be a good source of income, and I would love to see some kids get into this because you tend to attract people your age. I get a lot of people around my age, some older, some younger, but the bulk of it is people around your age because they identify with you. And so there's a lot of people out there. There's a lot of young people out there that are just never going to stumble across my channel, or they will stumble across it, but they'll just see me as an old guy and not want to bother listening or learning. Whereas if they encounter a young person, they're going to go, oh, what's this? I'm going to listen to this person. So we want to get some younger folks in here doing this stuff as well, and happy to help make that happen with you. Costco shopping, you did. All right, cool. I'm assuming that means you did sign up for a meeting. Rafael, 4:12 a.m. there in Portugal. Nice. You're either up early or very, very late. Oliver, is there a discount if you wish to renew or extend the contract? Which contract are we talking about? You're going to have to give me some more information. Renew or extend which contract? Costco, is it tax-free? Can we get a discount for family? I think I got too far behind on this chat. I'm not sure what you guys are referring to. When you borrow money out of your policy, it is tax-free because you're just taking a loan against it. You're using the cash value in your policy as collateral. So yes, in that sense, it's tax-free. And the retirement income that we talk about living on, we talk about borrowing against our policy, and that's how we access it tax-free. It grows tax-deferred. If you actually withdraw it from the policy, it's taxed. If you just borrow against the cash value, it's tax-free. And then when you pass away, the death benefit pays off any loans that you took. So that when you borrow against it, the death benefit pays off those loans. The rest of it goes to your beneficiary. Okay? Can you get a discount for family? I'm not sure. If you're talking about for these policies, there's no discount for family. I mean, I cut my commission to the bone for everybody in your family, and the insurance company is just going to charge you what they're going to charge you for life insurance. So there's no discounts to be had. If you're talking about something else, let me know and I'll adjust my answer. Top Gun, properly structured insurance is tax-free. Yeah. If you access it correctly. Costco. Oh, you're talking about for the Patreon. Can you get a discount for family? Yeah, if you set it up, I mean, if you access that, you'll probably want to have different people get in there. Talk to me about it. We'll get you in there, and if you sign up for the $50 one and you want to have family members get in there, we'll come up with a better rate to get them in there. But for the most part, you could probably sign you up for it, and any of you could participate under your ID in the chat groups. If you want each person to have their own ID, you could probably have them sign up under a lower tier. But we'll have to check. We'll have to check on that because I wouldn't be able to let those into the other chats just because we're limited on what tier is tied to. It happens automatically with the way I have that set up. So talk to me about that, and I may create a special tier for families. In fact, that sounds like a good idea. I'll do that. So if you're interested in that, let me know. Okay, you got yourself in the special group. All right, nice. You can't add yourself to the Discord. You listen 6 hours a day. That's awesome. I appreciate that. I will work with you to get that figured out. Okay? We will get that figured out. And I will add a tier. For family so that you can get all of them in there. Top Gun. Dang it, James. Switching to the $50 group. Don't tell your wife. I think she probably wouldn't mind. $50 a month expense is it should easily pay for itself. Let's put it that way. You're definitely gonna make more than that with the policies we get you set up for. Let's see. You have to add yourself. All right, I'll help you get that figured out, Costco. If you got on the Patreon, I'll get a notification for that, and I'll contact you after we get off of this live stream. Okay? Oliver, no worries. You're still young. You got years ahead of you. I'm not sure who you're responding to, but I'm sure that is good advice. All right, guys, it is late. I will try and contact you, Costco. I will look at. Let me know. Actually, here, before I get off, let me check the notifications because I want to make sure. Sometimes it shows up under a different name. Can you text me your Discord group? Send me an email. Or you text me, and then I'll be able to respond. We'll be able to chat that way. So my phone number is 541-337-1104. If you send me a text, I'll be able to respond to it, and we'll make sure you can get added in. Oliver, $50 a month to surround yourself with experts and overachievers is a no-brainer. Exactly, and that's what the goal is here. So that is the goal. We want to be surrounded with people that are they're basically experts in their field, and they're certainly overachievers if they're looking to better themselves. And the idea behind that group is we're going to help each other out. We're going to help everybody succeed. So yeah, it should easily pay for itself. So I'll keep an eye out, Costco, for that email. Otherwise, I will check. Oh, and Robert, Top Gun, thank you for the donation. I did see that come through 2 hours ago, but I was in the middle of a rant. thank you for tipping the host. It is always appreciated, and you're consistent at doing that, and it's much appreciated. So it's not much in the scheme of things, obviously. $5. I've been on here for 2 hours, but it's the thought that counts, and it really does. It does mean a lot to me. So, okay, good. You texted me on Patreon. I'll reach out to you there. So we're gonna close up this one. Love the conversation tonight, guys. It's been awesome. We definitely went way over the hour that I wanted to keep it at. But the only reason I want to keep it at an hour really was because I want people to be able to not be intimidated to watch this down the road, because there's a lot of good content that we go over in these. But what I've started to do is I'm taking pieces of these and I'm going to make little videos out of them. And so I'll be able to take the good things that we talked about, edit it down, and then put out a separate video so people can have access to the content without having to watch a 2.5 or 3 hour live stream. Because that's definitely asking a lot of folks, I think. I appreciate you guys sticking around. You know what? Before we go, I want to give something away. I always like to give away prizes, at least one, and we did not do that yet. So we're going to do a random number generator. Pick a number between 1 and 10. Anybody who's still on the chat, looks like we only got 8. Some people fell away. We got 8 people in the chat. Pick a number between 1 and 10. I hope all of you can put a number here in the chat. And we'll do a random number generator. I'll put it up on the screen. And whoever wins, you get to pick your prize. Your prize is either one of the 2 books that's listed in the show description, Becoming Your Own Banker or The Retirement Miracle. Becoming Your Own Banker is about mindset and whole life insurance, but it's the best things about that book is how to think about moving money. Okay, how to become your own banker. Because the bankers in this world, they're in a good position. Okay, so the other book, The Retirement Miracle, is about indexed universal life. It's a great book to go over the possibilities behind it and why you should consider it. Top Gun gets number 7. Okay. The other choices you have is anything in my Teespring marketplace. The link to that is in the show description as well. Okay? So you get to pick. Top Gun won a hoodie, and that was like $50. This is a $50 value because I will reimburse you for the cost of the whatever you pick plus the shipping. But you're going to have to email me. If you win, you have to email me. Last week, Hicken was the winner. He seemed excited about it, but I didn't get an email from him, so I was not able to connect him with the links that he needs. And I haven't been able to get him the prize. I haven't been able to reimburse him because the way that it works is you're going to go to those links, you're going to order it and pay for it. That way you can ship it right to you. And then I will reimburse you through PayPal or Cash App or however we need to do it. But I will reimburse you immediately as soon as you send me the receipt. But you're going to have to send me the receipt. Okay? So if you're the winner, that's the steps you got to go through. I want to get you these prizes, but you got to email me. Okay? You got to connect with me. Yeah, please don't pick the next day shipping or expedited, but if you do, I will still reimburse you. But I can give away more prizes if people don't do that. There's definitely a finite amount that we're dealing with. So, okay, so you guys got your numbers picked. I see 3 in there. We still have more viewers who have not picked a number. Oliver, pick a number, man. Pick a number. I'm gonna give you guys 1 more minute, and then while I do that, I'm gonna set up the random number generator. We're gonna put it up on the screen, and then somebody's gonna win something. So get your number picked in here. Get your number picked. All right. I'm going to go to a random number generator. And now we got to get it on the screen so that everybody can see it. Let's see. Where is it at? There we go. Okay, random number generator. There we go. So we've got the random number generator on the screen. All right, good. You guys got your numbers in there. Oliver, you can't pick two numbers. I'm going to go with the last one you picked. Carlos, okay, you got 9. So we've got 1, 9, 4, and 7. All right, here comes the random number generator. Everybody else is missing out. Unless you get it in before I hit the button. You do not get to guess after I hit this button. And go. Number 7. Bobby, you always win these things. That's so funny. That's so funny. Top Gun is our winner again. Would you like that, or would you like me to spin again? See if we can get a different winner. It's totally up to you. I'm happy sending you more prizes. I know last time, though, you were willing to let somebody else win it. For some reason, these random number generators like whatever number you pick. Yeah, you love your hoodie, but everyone should get the book first, Becoming Your Own Banker. Absolutely. That's definitely, I think, you get the most value out of that. Definitely get the most value out of that. I'm wise to your strategy. Talking about picking multiple numbers, I'm sure. All right, I know we have a 20-second delay here, so I'll wait to see what you say. See if you're ready to pick up another one. Oh, of course. Okay. Well, you may have other people in your life. Get another copy of the book that you can give it to them. Maybe you give it as a Christmas gift. You can certainly make... Okay, spin again. You can certainly make use of multiple prizes. We'll go ahead and spin again. Here we go. 1, 2, 3. Number 4. Who's number 4? Who's number 4? Oliver. Oliver, the big winner. Number 4. Good thing I told you I was picking your second choice. So Oliver's our winner. Remember, you have to send me an email or contact me some way so I can get you the links. Although the links are in the description. They're in the show description. Make sure you guys hit the like button before you head out of here. But the links are in the description. Go to those and email me the receipt. So email me the receipt and I will get you reimbursed. If you have PayPal, that's my first choice because I have that directly connected to my business bank account. So I can transfer it out of that. If you don't have PayPal, I can reimburse you with Venmo or Cash App. It just makes it so that I have to transfer it out of my business account first and into my personal so that I can send it that way. So definitely easier if you got PayPal, but we'll get it to you either way. All right, guys, I appreciate you hanging out, giving me a couple of hours of your time. I hope I provided a lot of value to you, and I look forward to seeing you guys in the Discord. Look forward to seeing you in the Discord, and we are going to figure out by next week how to have some live chats on here. So if any of you are interested in being on this live stream, ask a live question, maybe just make a comment. Make sure you get on the Patreon, get in the Discord, and get familiar with that, with using those channels. There's some voice channels in there. I'm pretty excited about this. Pretty excited. So thanks for joining me today, guys. Have a great week, and we will see you next time.